Hi guys. Today we will analyze Nike stock, and calculate its intrinsic value using two different valuation models. Enjoy! Hit the like button and subscribe to my channel if you want to see more videos like this. Technical analysis. The stock's overall performance in the market is below average. Also recent evolutions are not positive. The short-term trend is negative, the long-term trend is negative. There should be more interesting stocks out there. Strong support levels are around $120 and $104.50. Next strong support level is around $96.50. Resistance levels are around $130 and $138. Next resistance level is around $146. In the last month the stock has been trading between $120.50 and $139.80 range, which is wide. It is currently trading near the lows of this range. The stock has an average volume of 7.8 million. This is a good sign as it is always nice to have a liquid stock. The stock has been in a downward trend since November 2021. Be careful. Intrinsic value. Buy low, sell high. We have heard it many times before. But how to know when it's low, and when it's high? The intrinsic value of a stock is its true value. It refers to what a stock is actually worth, even if some investors think it's worth a lot more than that amount. Intrinsic value is important, because it can help investors understand whether the cost of a stock is undervalued, or overvalued compared to the market value of the stock. Let's calculate the stock's intrinsic value. For more accurate results, we will use two different valuation models to calculate the intrinsic value of the stock. Discounted free cash flow model, using the formula below, then, valuation based on earnings per share, 5-year average P/E ratio and expected growth rate. First model. Discounted free cash flow valuation. This spreadsheet contains some financial data that we will use for the stock valuation. We see that the average revenue growth rate of the stock has been around 7% per year, for last 5 years. We see that the average profit margin of the stock has been around 10% per year, for last 5 years. Also we see that the average free cash flow to net income rate of the stock has been around 110% per year, for last 5 years. And we expect 8% per year average stock market return. Now, let's consider 3 different scenarios for Nike company: bad, average, and good. First scenario. Nike will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be low, 6%. Future profit margin would be low, 9%. Future free cash flow to net income rate would be low, 70%. In this case, the fair value of the stock today would be $45. Second scenario. Nike will have average performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be average, 8%. Future profit margin would be average, 10%. Future free cash flow to net income rate would be average, 80%. In this case, the fair value of the stock today would be $60. Third scenario. Nike will have high performance in next 5 years, and we will use the following parameters in our calculation. Future revenue growth rate would be high, 10%. Future profit margin would be high, 11%. Future free cash flow to net income rate would be high, 90%. In this case, the fair value of the stock today would be $80. Second model. Valuation based on earnings per share. This spreadsheet contains another financial data that we will use for the stock valuation. The current earning per share price for the company is 3.78. Minimum rate of return. I will use 10%. Because when we invest in individual stocks, we are looking for a higher return than the S&P 500. For Nike, analysts forecast growth rate around 10% per year in next 5 years, and future P/E around 32. Again, I will use 3 different scenarios for Nike company: bad, average, and good. First scenario. Nike will have bad performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be low, 6%. Future P/E would be low, 16. In this case, the fair value of the stock today would be $43. Second scenario. Nike will have average performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be average, 8%. Future PE would be average, 19. In this case, the fair value of the stock today would be $61. Third scenario. Nike will have high performance in next 5 years, and we will use the following parameters in our calculation. Future growth rate would be high, 10%. Future PE would be high, 22. In this case, the fair value of the stock today would be $83. As you can see, today the stock is overvalued, $120, even if we expect the company's high performance in future. The company scores good points on both the profitability and financial health. Nike is expected to show a medium growth in the next 5 years, 8 to 10% per year, but the stock is too expensive at the moment. Also, the stock has been in a downward trend since November 2021. I may consider buying the stock, if the stock drops to $80. Company's strengths. Nike is an American multinational corporation that is engaged in the design, development, manufacturing, and worldwide marketing and sales of footwear, apparel, equipment, accessories and services. Its products are sold through a mix of independent distributors, licensees and subsidiaries to some 18,000 retail accounts worldwide. Nike remains a dominant player with an attractive brand in the global sportswear and athletic footwear market. Nike's strong brand and product pipeline have enabled it to raise prices and increase sales of both apparel and footwear. Margins have been improving, as the company has been actively building its direct-to-consumer business, by cutting out the middlemen. Membership growth in its digital channel has exceeded expectations. All factories in Vietnam are operational with production back in line with pre-closure volumes, though transit times remain an issue. Nike has a great opportunity in fast-growing markets like China. More than 70% of Nike's growth over the next 5 years may come from outside North America. Nike has a strong balance sheet, moderate debt, and enough cash to cover all current obligations. The company has a return on assets of 16% and return on equity of 41%. This is amongst the best returns in the industry. Its profit margin of 13%. This is amongst the best returns in the industry. Nike is expected to show a medium growth in revenue. In the coming 5 years, the revenue will grow by 8 to 10% yearly. In the coming 5 years, the earnings per share will grow by 10 to 15% yearly. Risks. As a worldwide business, Nike is exposed to global problems like the war in Ukraine, shipping problems, and rising input costs. Nike's long-term results could be affected if these problems persist. Nike has recently suffered poor results in China, as rising nationalism has boosted native brands. Given the nation's rising importance in sportswear, Nike cannot afford to lose significant share. COVID-19 forced the temporary closure of Nike-owned stores, and those of its wholesale partners all over the world, and the crisis is not over. More disruptions would negatively impact its sales. While Nike is the market leader in many categories and many markets, some competitors, such as narrow-mode Lululemon, have found success with fashionable specialty products. The company tends to be a lightning rod for controversy, due to its high visibility. There are ongoing controversies concerning the treatment of its female and minority employees, its efforts to reduce taxation, and the treatment of workers in its supply chain. Thank you for watching. If you found this video helpful, please hit the like button and subscribe to my channel.